Hello and welcome to episode 5 of the Gold, Goats, and Guns podcast. My name is Tom Luongo. It is Wednesday, May 10th, 2017. So this morning we're going to talk about the big news of yesterday, which is the firing of James Comey as FBI director by Donald Trump. The second things I want to talk about, which all these things actually tie together, is the meeting between Secretary of State Rex Tillerson and Russian Foreign Minister Sergey Lavrov in Washington, which is significant, as well as the effects that this has had on the primary currency markets and gold and silver. So let's get right to it, shall we? All right. So Trump fired Comey yesterday, and it was apparently a surprise to a lot of people. It wasn't really a surprise to me, ultimately, because at some point Comey had to go. And the reason that he had to go was because he had inserted himself into the political process and would not actually stop running cover for Hillary Clinton. And Trump was not going to allow that. Because, look, it's like U.S. foreign policy doesn't make any sense until you realize that everything we do is aimed at destabilizing Russia's southern and western borders. Well, it's the same thing with Jim Comey. If you want to understand why he kept doing the things that he was doing and saying the things he was saying and the way he was saying them, it was simply to run cover for Hillary Clinton. Jim Comey has always been 1 to 2 degrees of separation removed from the Clintons since the 90s. He's been involved with the Clintons since the 90s. This is nothing new. And so at some point, he's always going to err on the side of falling on his sword. Now, the Democrats who would actually listen to this podcast would be like, no, he cost her the election. No, he didn't. He actually didn't, because he should have indicted her back in July, but he gave her the opportunity to try and convince the American people that she wasn't a crook and get herself elected as president and neatly avoid all the issues surrounding the things that she did while Secretary of State that were patently illegal. Okay? And then with the reopening of the investigation the week before the election, this was him trying to provide cover for himself in case Trump won. And then, 2 days before the election, he was providing cover for himself in case Hillary won. Look, this is the way things go. He was absolutely pressured to drop the investigation into her 2 days before the election. This was ultimately why I wound up voting for Trump. I wasn't going to vote for Trump until it became obvious to me that the FBI director had been effectively threatened behind the scenes by a presidential candidate. Now, this is not anything new to a hardened cynic like me or anything. It's just, this finally just tore it for me. I'm like, something, the heck with these people. I'm voting for Trump. I'm going to break with my own personal traditions and everything else, and I'm going to vote for Trump. Because normally I don't vote because, why encourage them? All right. So that's ultimately what I think what the situation is. So at the end of the day, Comey, said and was put on the stand enough times that he contradicted himself, and it was very obvious that that Trump had enough of it and wanted somebody in charge at the FBI in order to go that would stop blocking potential indictment of people who are obviously guilty. And he's been doing that and running cover for them for months. And there's multiple reports within the FBI that there are people underneath him who are extremely angry with the situation, extremely frustrated with it. And now that Jeff Sessions has control of the Department of Justice and has gotten rid of most of the Obama dead-enders who were running interference for all of this stuff behind the scenes, now that they're mostly gone, now we have Comey getting fired. So at the end of the day, if these guys, i.e. the Trump administration, was going to be successful here, this is the kind of thing that will tell you whether they're succeeding or not, right? And that's why this is so important. And that's why the markets reacted the way they did, because, the Democrats are not going to get a hold of Trump. The neocons might actually be losing influence over him. They might actually have an influence over him like we thought they did a month ago. I've heard reports of H.R. McMaster on the outs now as a national security advisor. It'd be fascinating to see Trump go through 3 of them in the first 6 months in office. Well, one before he even entered office, and then one getting rid of another one 6 months into office. Because it was McMaster who was the architect, the brainchild behind the Al-Sharat air base bombing in Syria, which, as you well know, I think is one of the great geopolitical blunders of all time, which Trump has now had to walk back completely. And this ties into today's meeting between Secretary of State Rex Tillerson and Russian Foreign Minister Sergei Lavrov, because they're actually speaking now. This is the first time Lavrov has come to the United States in over a year and a half. It's always been John Kerry to previously, or Tillerson going to Moscow or going to Europe somewhere and meeting with Lavrov there, not Lavrov coming to the United States. Now that so this is just Lavrov showing up here in Washington is a huge signal that the process of the Russians and the Americans beginning to talk to each other as human beings again can actually begin. And, you know, when you step back for a second and you look at the reaction to the Comey firing, you see a very interesting pattern emerge. You see a very interesting little nugget of information comes out. So at the article about this on Zero Hedge, there's a whole laundry list of tweets and reactions from various senators and congressmen and whatnot. And on the left, of course, on the Democrats, you have, this is Nixonian. This is horrible. How could you do this? And, 2 days ago, they were like, oh, Jim Comey cost us the election. He's a son of a bitch. And like today, he's, oh my God, how could Trump do this? Because again, it's just reflexively, whatever Trump does, they take the opposite side of it. It's like it's opposite day. I mean, it's like they're 4 years old. Well, but being a Marxist means having the emotional maturity of a 4-year-old. So ultimately, if you look through this list of, Chuck Schumer and Feinstein and, Hillary and all the rest of them, they're all talking their book. They're all worried to hell and gone that now that Comey's no longer there to run interference for them, they're all going to jail. And guess who's still on their side? John McCain. But not Lindsey Graham. Lindsey Graham cheered this decision. Why? Because Graham can see what I'm seeing probably better than I'm seeing, which is that Trump is getting control of the swamp. He's getting control of the top of the administration. Tillerson has cleaned house at state. Sessions has cleaned house at the DOJ. Ben Carson's cleaning up HUD. Betsy DeVos is cleaning up the DOE, the Department of Education. Yada, all the way down the line. And if that's the case, okay, Trump was able to get the House to pass Obamacare repeal. It's a flawed bill. It's not that much better than Obamacare, but it's a political win. And the worm is starting to turn. The whole thing is starting to turn. And if that's the case, then Graham's not stupid. He's going to, if he's jumping ship, expect Marco Rubio to be next. And John McCain will go down with the good ship Democrats. And if it gets really out of control, expect McCain to resign. Because he can't be recalled, but he can resign. And, it was funny, the reaction to that I tweeted out last night, that CNN it said something about, a lot of Department of Justice officials and whatnot are now really scared about this firing. And I tweeted out, just here's a list of the countries with which we do not have an extradition treaty, FYI. Just saying. All right. So this ties into what we're seeing in the markets, okay? Because right after Comey was fired, we saw a bottom in gold and silver. We saw a further rally in the dollar across the forex markets, and I'll show you those charts in a little bit. But let's talk. And the reason, so you have two main reasons for this, right? One is the Comey firing, which is now kind of the moment where the markets wake up and go, uh-oh, Trump's serious. And the second one is the reality that Emmanuel Macron being elected president in France doesn't solve anything. Fully 60% of the people in France are not behind his government, his presidency. This is no mandate. 10% of the people abstained openly. 35% of them didn't even show up, or 30% of them didn't show up to vote, and 35% of those voted for Marine Le Pen. So he's already having to fight the unions. There's no good ending here. It just looks good on paper, kind of like the way Macron looked good on paper. So, buyer's remorse is already setting in France. The reality is that we're starting to see an intensification within the cross. If you take a look at all of the major markets today, they're all screaming the same thing, which is dollar liquidity is getting tighter, meaning the markets are getting scared that there's something coming between the Home Capital Group bank run, between Italy's airline having to be bailed out again. The Italian banks are a mess, and all of this stuff, that it's beginning to dawn on people. Dollar liquidity is tight. And it'll be interesting to see tomorrow night what the Fed's 8.4.1 report gives us on that front. I've got an article, the last article I wrote for Seeking Alpha on gold. I tied the movements in gold and silver to the level of excess reserves within the Fed's banking system, within the banking system that the Fed's paying interest on every month, and how that ties into the use of the reverse repo window and excess deposits on tap at the Federal Reserve banks and all that. And it all makes sense. And then it's all pointing to the same thing, which is that dollar liquidity is tight. And this is what I've been saying is why gold, pulled back from 1,300 is because it's the easiest thing to sell in when you need to raise dollars, gold futures contract is the easiest thing in the world to sell. It doesn't affect your capital adequacy ratios. It doesn't affect your, if you're hedged there as a fund manager, you can sell it and it doesn't affect other things. It doesn't affect your you can raise cash that way. It doesn't affect your treasury bond holdings, which are a lot of funds are mandated to hold a certain amount in cash versus treasury bonds and whatnot. But nobody has any requirements on how much gold they're allowed, to hold, except for zero. As in, we're not allowed to hold any, because that's the prospectus, because that's the covenant of the particular fund. There's a lot of funds like that, by the way. So gold always gets whacked like this, and this is just the way it is. And so since Sunday, there's been no substantive change on the weekly chart for gold, but this bar has now become mildly bullish, but it's still got a long way to go to negate this signal here. I mean, we're looking at maybe a possible firming this week, and then possibly a quick reversal next week, two bar reversal next week, or possibly, but the reality is that this is your target right now in gold. It's not in a bullish position, but the kinds of movements that we've had create spike bottoms. And when we start to look at silver, this is the daily chart of silver. And you guys who've been following me for years know that I'm not a big fan of daily charts. I rarely ever put them up. But this is a classic spike bottom and potential one bar reversal here in silver. That this movement down in silver is way overdone. Okay. And what's interesting is that as I was going to press this morning on this, and I was going to grab this chart, I'll give you an idea. I don't even do my own daily charts anymore. I just don't even update the data. It's just not worth it to me. So I just go and grab screenshots. So the high from yesterday is 1632, and obviously right now, that's been going on all morning, is a really nasty fight at that level. If silver is able to close above this today, this will be a one bar reversal, and this is a huge, spike bottom. And the fact that, ultimately we closed here and opened here, is a huge move as well. That this was way overdone and not a real movement. So I want to see today at a minimum a move above 1632 here on silver, which would probably push gold above its daily reversal target of 1226. And then, then you're looking at 1645 or so here. And then, we may actually get a counter trend rally. Primary trends are still bearish for both gold and silver, and even for the dollar. But as you can see, because this again is a daily chart of the dollar, the US dollar index, the trade weighted dollar index, which is dominated by the euro and the yen. And both the euro and the yen have been getting crushed since Macron's victory. The yen has moved from 108 to 114 versus the dollar. The euro is broken down from $1.10 to $1.08. And the weird part about currency markets is they're quoted differently. Down on the euro is bad, up on the is down on the euro is bad for the euro, and up on the yen is bad for the yen. And so what you have here, and these three bars here are very, very interesting. Let's look at this one real quick. This is what you call an engulfing bar, because both the low of the day and the high of the day broke the low and the high of the previous day, and then we closed above the high of the previous day after spiking lower. This is an enormous bar. It's telling you that, okay, this rundown in the dollar is done. These are huge, huge signals. Okay. And because of, then we got massive follow through that pushed through this cluster of resistance right here, filled this gap, the whole 9 yards. And now we're still trading above it. Now we're getting a little bit of gap filling here, but that's nothing new. So the dollar is setting up for a move back to 100 or 100.5 or even a 101, and a move obviously over the course of the next few days or next couple of weeks above this high here would be a tremendous signal that the bear market, the short-term bear market that we've had in the dollar is over. And it's been mostly a bear market correction after a massive bull run over the course of the last couple of years. So at some point there has to be a correction as markets rebalance themselves. So that is telling you that even though we have this is, folding into my thesis that dollar liquidity is tight. If you look at the treasury markets, they've been selling off. If you look at even the equity markets have been struggling. Everything is screaming, raise cash, get into the dollar this week. That's what's been going on. And we may get a bit of a counter trend bounce in gold and silver, but we're not going to get any kind of new resumption of a new bull market or anything. What it's telling you is that we can get some relief here. And the fact is that if we get a spike bottom in both gold and silver that are above these important support levels, that's a good sign from a medium term and a longer term perspective, that gold and silver are continually putting in higher lows every time they correct. And so for silver, that number is around 1578. And so bouncing off $16 here or 1606 is really good when viewed from that perspective. So markets are very important. It's very important that you look at the stock or the currency or the metal or the commodity, whatever it is, you look at it from multiple time frames. You have to look at what happens in the daily time frame. How is that going to translate into a weekly? How does that translate into the weekly chart and then to the monthly chart and then to the quarterly chart and then eventually into the yearly chart? That's what tells you whether short-term moves have significance in the longer trend, because all information is fractal. Okay. And it's so very important to understand that about how markets trade, so that you have some idea, because that actually will tell you, like if I was day trading the dollar here, I'd be looking at, wanting to put on a short position either here or here, right? If we get a break above this, I'd close the short position I put on here and back it off and then go to here and then wait for that and to see if we get a resumption of the downtrend. If this fails, then, find something in around 105, 100.5, because there's a lot of highs in here, and then we move back up to 101 and blah, 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 blah. So, and also back out to the weekly chart and see if any of those points are weekly highs or weekly lows, because that's where you can find out what traders are thinking at that level as opposed to this level, because everybody's, different people trade with different focuses, right? I take positions with very long-term focuses, but I can, drill in to see what's happening in the immediate term, because the rules are all the same. Reading a 1-minute chart and reading a 1-year chart, the rules are exactly the same. Okay. The question is, who are the players in that market and what's their mindset? Okay. That's what changes. All right. So what we're looking for in gold today is a close above 1226, and for silver above 1632. If we get that, we'll get a short-term counter-trend rally in both of them. A continued move up in the dollar index, which will absolutely portend a further drop in the euro and probably the yen. I think the yen is a little overstretched to the upside right now, but the euro has got plenty of room to drop to the downside. It can easily move to $1.06. So, all right. So that's what I've got. We'll probably talk again, I don't know, maybe Saturday, after we get the weekly closes, and then we can go over all this stuff and update for the weekly closes. So, and then of course, God knows what will happen between now and then, because, it's not like nothing happens on a day-to-day basis, and the world is, really boring. All right. So you guys, take care. We'll talk to you in a couple of days. Keep your stick on the ice.